And welcome guys to the weekly GBPUSD trade review. Now what you see in here is the 4 hour is the daily time frame. Now last week was really confusing, but we had trades in there because the week first consolidated for 3 days. As you can see in our previous video, we talked about a retracement from exactly this point and it dropped. So this whole week the market has been consolidating. Let me show you guys on the 4 hour time frame. Let's go. Now if you can see in here, we had an uptrend of this channel. This was a channel, a good uptrend which gave us many pips you saw in the previous video. But this week the market was just in one place. Now let's see the trades we took. We talked about this drop from around here. I think around here this trend line was adjusted. So let's look at the trades we had the previous week. Let's first drop to the 4 hour time frame, and I would like to thank everyone who watched the previous video. We are growing together, guys, and those in the Telegram group. Wow, it was a crazy week. We grew from 155 to 180 members right currently. So let's see the trades. This is the 4 hour time frame. The market began from around this point, and all this is the action for this week. From this point, this is where the market began from, and it was a downtrend, but it confirmed to us on around Wednesday. That's when the market confirmed the downtrend. Now we are in the festive season week, and next week we won't be trading, guys. We won't be trading. So let's drop down to the 15-minute time frame, and we see the trades we took. Let me scroll back a little bit, guys, a little bit. Now this is where our week began from. Look at all this consolidation. It's called a range. The market wasn't giving us a trend for the week. It was just in one place. Now this area in here, it was just consolidating, guys. It opened from here and just continued the consolidation, no momentum. So when it reached around here, our bias was to go buy after this a drop to this box, but thing took us out, went back to this support and rallied back up. Now what did we see? We saw the reason why we sold from here was this was a previous resistance. It formed an M, so we sold, but market stopped around the psychological level and this low of the week, and it just continued this way with what it was doing. So when it shot back up to this level, there's a trend line running from another time frame, and was crossing around here. The reason we sold from here was this was the third touch of that trend line. I don't know if we can pull it up. Let's see if we can pull it up. Sorry guys, let's see if we can pull up this trend line. We always remove some. Now I think this wasn't it. Yeah, this was it, I think. No, this wasn't it, but let me leave that trend line there. So this wasn't it, but I think we had a trend line there in there. These trades are too many and they're perfect. That's why we always forget some setups. But if you want to remember the setups, go to the Telegram group. The link is in the description. You'll see the trades we took. Now we sold. Anyway, let's just forget about the trend line. Let's look at the confluences we'd have taken. This was a resistance. You can see this. There's a psychological level in there, and there was this strategy of ours. Those are 3 confluences. So we took that sell. It was so rapid, it was too fast. So after this, we missed this buy. We hadn't seen this W pattern, but we would have gotten from our entry level would have been after this engulfing here, this bullish engulfing. I would have bought, but we missed it. So we sold this pair and it gave us all these pips. So what happened? The market it broke this resistance and continued and formed another one. So when it rallied back, we're just watching the market. Now when it rallied back, it formed this trend line, giving us a third touch from you see this box. Let me keep deleting this. Let me delete this too. Now you see this box. There is a psychological level. There is a trend line. That's 2, and there is a level. This is around the 61.8. Actually, that's the reason why we sold from around here. If you take a fib from here to this low, it's around the 61.8. Now when it rejected, we got in from around this point. Started dropping, and boom, our take profit was around here. We made those pips. Now when it came back in here, it gave us a solid aim. Now there's this trend line was running around here. Yeah, exactly. I don't remember it too well. I don't know where the trend line was, but just understand the concept. Adjust the trend line. So when it gave us this nice M pattern in here, we sold this pair after it's engulfing. You see this green candle and the red? We made it engulf and closed below. We entered up to this psychological level of former where the market reversed from. It just hit there. Now when it hit there and started doing this, we took profit from around there. And when it hit, it started doing this, we drew a trend line. That's how fast we draw trend lines. So let me just remove. I don't want to confuse you guys. Let me keep removing this drawing so fast. So we watch the market doing all this nonsense, all this too much nonsense around here, all this. But when it came back in here, now this is it. I think this is the trend line which was coming from around here. Though we adjusted it. Guys, trend lines are confusing me right now, but let's go. So when it gave us this M pattern in here, this M, we sold this pair. No, we didn't sell this pair actually. So this trend line is supposed to begin from around this level. Yeah, this is how it is. So when it came back, gave us this, say we drew this trend line, this point A, point B. So waited for the market to pull back to this level. Now if you pull up a fib, what level is that? It's around the 61.8 or 78.6. So we sold from here. Now we sold exactly when you saw this momentum candle, and this was supposed to be a point of entry around here, but we started stacking in positions rapidly. Now our first bias was to buy from around after this pullback, so we were waiting for the market. But when it flashed up and we had drawn the trend line, we're like, wow, that's a sell. We took this sell back to this trend line, so we took some profit from here. But when it broke through and retested and closed below the trend line, this downward trend line, we sold. Now as you can see, this X in here, this was initially where our W pattern was supposed to form for a push-up, but it didn't. So when it broke, we're changing our bias to more sell. So we sold up to this level, this previous level, and it price touched. We didn't set our take profit exactly here. We put it around here. So our take profit was hit and the market reversed back rapidly. So that's the beauty of it. We just spend most of the time watching. Now look at this. We didn't take this sell, but it went back to the 78.6. That's how fast we move. So let me try to remove this so fast. So when we are trading, when we are with the team, we look for 4 to 3 confluences before taking in a trade, guys. So our bias again was for the market to come back and give us this W pattern and shoot. We wanted to replay this, but it didn't happen. We were stopped out on this and we lost this trade. So the market went down up to this point. Now when it gave us this W pattern, guys, that's a psychological level close, and there is an order block. If you use the signal order blocks, the indicator order blocks with signals, it bounced on an order block and quickly reversed, and we didn't jump in from here. We waited for it to come back to this level. See this resistance? This resistance stands support, and when it gave us this W pattern, we drew a trend line point. This is point B. Now when it flashed up, we waited for points it formed to give us the second leg of the W pattern. So we bought up to this level. Now back to this level, the market started behaving again. We sold this pair when it gave us this touch. When it gave us this touch, we first sold, but it was a quick sell, guys. So remember, this trend line was still running. Our take profit was around here, and we had risked like only 5 pips with the team. We had risked 5 pips around here. These are 5 pips. Now it flashed up. Now if you check the Telegram group, I told guys wait for another M to form. Someone called Sammy was like, is it too late to jump in? I told him it's late, but the market is going to flash back up to this trend line, and that's when you jump in. So when it came back here and formed this wick, we stacked positions, guys. We milked this market. This was Thursday. We make the market. So we took profit from this psychological level. It gave us, I remember it was 150 pips up to this level. Nice profits. So Friday came in and the market was playing, you guys. It's 2 days to Christmas. What do you expect? So our bias at first was to sell from this level. Since there was an order block around here, If you use an indicator, it's a very nice indicator. You don't need to study SMC. So we first lost this trade to this level. This was point A, point B, point C. We're supposed to buy. So instead of buying from here, we sold, and it just came and touched this and reversed back. We thought it was going to break after SM, but that did happen. So when I sent out the signal, I was like, you guys, we have lost our first setup of the day. So let's wait for it to come to this box. Now look at what Geo did today, hours back. Just came and touched the 61.8. Yeah, around here. Pull up 61.8. Look at that. Just touched and went back. And I think there's news. That's why it flashed down up to here. The market has been weird this week. It has been very weird this week. But guys, it's Christmas time, so we won't be trading next week. We expect everyone to be on holiday, so we won't be trading. So my advice to you guys, stop jumping in and out of trades. Wait for the market to come to your zone. Always wait. So you guys have problems with entries, we shall make a video about that. I wanted to keep this video short. Have a nice day and Merry Christmas, guys.